live. We are getting this party started right now. We are making sure every single trader is all set, ready to roll. Good morning, good morning, good morning. I am so excited, ready to rock and roll, ready to get after this day, and ready to dive into day one of our shorting. This is going to be such a great time. This is going to be such a great experience, and I'm just really looking forward to helping you become a better trader. I'm really looking forward to getting to you where you are supposed to be. I think every single person that's watching this right now has either A, been trading before, or B, is obviously a brand new trader. But if you are part of the A person, you are probably a trader that has been trading but hasn't found the success they want yet. Does that sound like you? Are you a person that has been trading and you feel like you're still inconsistent? You've had a couple wins, but it seems like you have a lot more losses than wins. It seems like when you trade, you aren't actually growing your account. It's just like you just feel like you're gambling your money away. Sometimes you win, sometimes you lose, but it seems that your account is slowly bleeding. You've tried again options. You've tried this strategy, this strategy, this strategy. This whole entire boot camp, guys, this whole entire next 30 days, my goal is to make sure that you are leaving here. And if you want to leave here, that's up to you. If you want to stay, obviously perfect. But at the end of this 30 days, you are leaving here saying to yourself, I know exactly the way I want to trade. I know the way Deck makes money now. He has explained absolutely everything perfectly clearly, and I can now go ahead and be able to perfect this strategy even more. Let's talk about some expectations. Let's talk about what's actual realistic for us. In the next 30 days, guys, can we expect that we're all going to be making millions of dollars? And the answer is no. We're not all just going to make millions of dollars in 30 days. But what I do want to get to you over these next 30 days is I want to give you a foundation. I want to give you a clear-cut strategy. I want to make sure you're confident with your trading. And yes, I do want to see you making money before you leave here after this 30 days. So the thing is, team, I want to make sure that I am giving you it all. I've told you before, you guys are all set being here right now. I want to give you the answers. I am not going to be a mentor that's going to say, hey guys, go now buy this course. That's not what we're doing here. This is me in front of you for 30 days in a row, making sure you understand the exact way on how I make the most money profitable. That's all it is. Predictable, profitable. That's the two things I have here. Now, over the last 10 years of trading, I have been able to trade a lot of different ways. I've done dip buys and bounce plays. I've done swing trades and long-term investments. I've dabbled with some futures. I've done a whole year of options trading. Shorting is the number one way that I found is the most profitable and is the most predictable. Now, some of you guys may already have a little understanding of how shorting works, and that's great. But today, we truly want to get a nice foundation of shorting. This next 30 days, I ask you, please be an open book. For the next 30 days, please be like clay. Let me mold you into the trader I want you to be. Please don't give me any backlash. Please don't say, oh, Deck, I don't want to do this. I don't want to do that. I want to tell you exactly the steps that I took to get to where I'm at today. Now, if you ignore those steps, that's on you. You ignore those steps. But I'm going to tell you exactly what I did. So, starting on off, I did not have any money whatsoever when I first started. So I paper traded when I first started. Now, I know some people say, I don't like paper trading. Paper trading, Deck, I'm not a fan of it. Paper trading, I don't want to do it. And I say, why? And you say, because it does not have the same emotional feel. Just because, again, I'm not the same. I don't trade the exact same. Paper trading is not for you to have the same emotions. Paper trade is for you to gain experience. If you are a brand new trader and you have no idea how to do the strategy, and you have no idea what the strategy is all about, and you have no idea how to short, why in the world do you want to put real money into it? And nearly anything you do that you want to be great, you want to do baby steps. You want to do baby steps. So maybe for at least the first couple trades, you do some paper trading. But I'll tell you what I did. I did an entire year of paper trading. And the reason why I did an entire year was, number one, I didn't have any money. And number two, I was obsessed. I was obsessed with learning how to trade. I was obsessed with learning how to be able to make money in the stock market. When I first discovered stock trading, I knew that this was my golden ticket. I always wanted to make money, but I never knew how to make money. Has anyone else been in that situation? Has anyone else said, I don't understand how people have $1 million homes. I don't understand how people have enough money to be able to drive a Lamborghini or a Ferrari. How do people travel the world? Because that was always my kind of biggest question when I was younger. Because my dad worked 3 jobs. My mom worked 2 jobs. We basically had a babysitter my whole entire childhood because I had so many siblings. My parents are just working all over the place. Every now and then we go on vacation, usually vacation once a year. And I used to look at these huge houses down in Florida and I say, how in the world is my dad working 3 jobs? My mom's working 2 jobs. And still, I have an amazing childhood. Wouldn't change it for the world. But how are they working so hard and these people have so much more money? Like, is there something we're missing? And the thing that I've learned is that you could be the hardest worker in the field. But the thing is, you have to be in the correct field. If you are the hardest worker, which I respect, which I love, you have to be in the correct field to be able to accelerate those gains. Unfortunately, if you are the hardest working teacher in the world, that's fantastic and you are leaving an amazing impact. But you have to realize that you're capped. You are getting paid a lot of times the same amount as a teacher who just rolls in a TV. And that's what's so disappointing. The thing is, if you are an accountant, a lot of times you are tapped. You are saying you signed for $80,000 a year. It doesn't matter if you work your ass off or if you show up late and just get by. You are getting $80,000 on the year. The great thing about stock trading, the great thing about investing, the great thing about this strategy right here that I'm going to teach you is that there is no cap. It comes down to the more you put in, the more effort you take, the more you learn, the more time you spend, the more money you make. And that's the type of job that I want. That's the type of job that I want to be involved in because I know I'm going to work hard. I know I'm going to show up. I know I'm going to be here. I know that I'm going to take time every single day to do as much as I possibly can. And that's why I've been able to get to where I'm at here because I'm putting in the work just because I'm in the correct field. So traders, that's what you guys need to understand right here, right now. Now at the same side, we could also see the negative effects. And what are the negative effects? The negative effects would be, well, Deck, I want to become a multimillionaire. Okay, great. I love that. But at the same time, I love sleeping in. I get a little cranky if I don't sleep in. Okay, well, that's not probably the best start. And at the same time, Deck, I really don't have any time to trade. Okay, well, do you have any time to study? No real time to study. And I don't know, sometimes again, me and my girls want to go out, so we're going to party it up a little bit. If you want to be a millionaire, you have to have the millionaire work ethic. If you do not have a millionaire work ethic, you got to think about how much is your work ethic. Is your work ethic $100,000 work ethic? Or is your work ethic maybe a $10 an hour work ethic? Just because you're here doesn't mean you're going to make money. Now it comes on down to you actually, of course, putting in that time. So that is so important for you to understand. So when I first started stock trading, guys, remember, I paper traded right away. I paper traded because I did not have any real money. And I will tell you this right now. I'm going to be very honest. I'm going to be very transparent. If I had real money, I probably would have traded it right away. But I always say one of the greatest blessings was I didn't have real money. And it forced me to paper trade. It forced me to blow up my account a million different times. And it didn't matter because it was fake money. I want you guys to know right now, it is the smart thing to do to paper trade first. Just like if you want to be an F-16 jet fighter pilot, you don't just go to an F-16, you go in the simulator. You don't go to your instructor and say, instructor, this isn't real. Just put me in one of those planes. And I come to you and I say, didn't you crash in the simulator like 20 times? That is a $2 billion plane. Do you think we're going to let you even go in that thing, go even near it when you can't even fly it in the simulator? So when you are in the simulator, take it serious. When you're in the simulator, think about how much money you have in real life. Don't say, I have people do this all the time. They say, Deck, I've been able to turn $2 million into $5 million. But when I trade real money, I can't make any money. I say, how much money do you have in real life? They say $1,500. Well, why are we doing any paper trades at $2 million? If you cannot grow a $1,500 paper trading account, why are you going for real money? So make sure that you are doing that first. Now, I know that's something that a lot of traders always say, oh man, that stinks. I want to trade real money right away. Remember, guys, this next 30 days, you're going to be molded, okay? Don't give me any backlash. Don't give me any attitude. I want you to sit here. I want you to listen. I want you to learn. I want you to absorb. And I want you guys to be able to take it all in. I'm taking this next 30 days that every single person says, wow, Deck went above and beyond for me. Deck, again, not only reached my expectations, he went above my expectations. We are here to teach. We are here to make sure that you guys are getting everything that you guys need. Something that you are also going to have to understand is that some of your trades, some of your brokers, you guys might say, hey, Deck, there's no shares available to short. Shorting is a very special thing. Now, we're going to talk about what shorting is, obviously, very soon in the future here, but we want you guys to understand that if you are on these brokers, unfortunately, they are not going to be the best brokers for you. If you are on Robinhood right now, that is not going to be a good shorting broker. If you are on E-Trade right now, that is not going to be a good shorting broker. If you're on TD Ameritrade right now, that is not a good shorting broker. If you're on Charles Schwab at this moment, that is not a good shorting broker. If you're on probably other rather popular ones, those are not the best shorting brokers. Now, what I mean by that is go over right now and let's just see if you have shares available to short on maybe one of these hot little penny stock plays. So for instance, let's go over to TVGN here and let's just see if my broker has shorts and your broker does not have shorts. Let's just see what we have here. So I'm going to just type in TVGN. TVGN. Let's see if I really like this play. Can I go after and short it? So what I do is I go over to my short request button and I click locate here. And you can see I now have shares available to short. For $1.74, I can short 100 shares. If you do not have this, if you do not have shares available to short, I highly suggest that you change your broker to a better shorting broker. And the reason is because after I teach you this strategy and after we go through this together, the number one complaint I hear is, okay, guys, I'm going to go short TVGN. And people say, Deck, I can't short TVGN. My broker won't allow it. change brokers. People think, again, changing brokers is super hard. It's not hard at all. Take 5 minutes, fill out an application, and then just take your money out of your broker and put it to the other broker. People, again, act like once they pick a broker, they're stuck with that broker forever. That's not what you guys need to do. There is going to be many times. Let's go ahead and take a look at another play. Let's go over and take a look over on KOSS, let's say. KOSS, deck, I want to go ahead and short KOSS. So again, I click locate, and we actually don't even need to locate it because there's E. There's an E here that stands for easily accessible for shorts. So let's go over and take a look at, maybe some other plays. CCLD right here. CCLD. If I type in CCLD over on Lightspeed, you can see there's an L here. An L means I need to locate the shares. So I click CCLD and bada boom, now I can go ahead and short this play. So that is super important for you guys to be able to understand right here, right off the rip, that you guys, again, need to be having the correct broker. So if you are using Robinhood, TD Ameritrade, E-Trade, Charles Schwab, all the other ones out there, a lot of them are not going to be focused on shorting. And that's what's going to be very big for us to be able to understand and kind of break on down. To our introduction of shorting. Well, for anyone who does not know, shorting is going to be when we bet against the company. That's what we're doing here, team. We are going to bet against the stock. We are going to say not that the stock is going to rise, but that this stock is going to fall and fade. Now, the greatest thing about this is that we know that most of these penny stocks are not good plays. Let's flip the script here. Let's go over to www.finviz.com. So when we go over to finviz.com and we check this on out, we can click screener right here. And you can see right here, there are 9,510 stocks available. 9,510 stocks available. How difficult is it to be able to find the number one stock that's going to spike on the day? It's going to be very difficult. People always search this question. They go on Google, they ask me, they type it on Twitter. What's going to be the best play? What's going to be the best stock? What stock is going to rise in the next few years? What is going to be the next play to run on up? Well, guys, you have a 1 in 9,510 chance of finding that best play. Now, instead, what can we do? We can wait for answers to be given to us. If I know that these are all the top gainers on the day, I know GME's the top gainer, I know ACIU's the top gainer, I know TVGN's the top gainer, I know CCLD's the top gainer. Guess what, team? I know that these are going to have opportunities to come crashing all the way back on down. So today, I really want to make sure you understand the psychology behind shorting and why we love it so much. So let's think about this here, team. We know that if we had to close our eyes and there was a bag of marbles, and inside this bag of marbles, there was 9,500 red ones, and there was one blue one, which was going to be the play that we want to get involved in, the one that's going to spike up to the moon, and I reached my hand into it. What are the odds that I grab that one blue one, that I'm going to nail that play? And the odds are very bad. But what if I said, hey, you know what? This morning, I know all these plays are up this morning, and now these are now my targets for the plays that are going to become the best shorts. Because let's actually go through something. This might be a little bit weird here, team, but let's check this on out. If I take a look at ACIU today, take a look what ACIU is doing. ACIU had a monster spike this morning. What is it doing right now? It's crashing on down. Traders, let's go over and take a look at these. TVGN, what did this play do? It went on a monster spike. What is it doing right now? It's crashing on down, right? CCLD, take a look at this play. This play this morning went on a monster spike. What did it end up doing? It came on crashing all the way back on down, right? Let's take a look at all of these plays here. These plays are known for very big spikes and then comes crashing back on down. When I'm talking about shorting, I am not talking about shorting Apple. I am not talking about shorting Microsoft. I am not talking about shorting any sort of blue chip play. There has been a shift in the way that people trade stocks, a shift in a way that people see investments ever since social media came on out. And people have been missing, I think, the biggest way to make profit. The way that I've been able to make over $551,000. You guys have seen this. I'll bring this picture up right now. This is everything I have. Year to date, $570,000. This is right from Lightspeed right here. Previous day, $4,000. Month to date, $61,000. You can see these profits, $4,000, $8,000. You could see $12,000 gains, $6,000 gains, $5,000, $8,000, $10,000, $22,000 profit days. How in the world am I doing this? How in the world is this guy, again, making so much money? People are missing out. And I don't care how much I explain it to people. People still miss out. Guys, it's almost ridiculous. It's almost crazy. I've told everyone on my Twitter. I told everyone on my stock tweets. I told everyone on my Discord. I told everyone on my Facebook. I told everyone on the email list. I told everyone on my TikTok. I told everyone here. Everyone here, I am going to teach you the best way to be able to make money. Still, not every single person is jumping at that. Not every single person is saying, ooh, teach me. People fall into habits and they have such a hard time breaking habits. They fall into habits and they say, I want to be an option trader. And they lose one trade and they lose again 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 and they lose again. And they say, man, I'm just maybe not that very good at stock trading, but I still want to be an option trader. Okay, so I lose again. Okay, I'm going to fund my account. Hey, maybe you should try a different strategy. No, I want to be an option trader. It's like we're adults, but a lot of times adults just get so stubborn. They don't want to take direction. direction. They don't want to learn. They don't want to try anything different. I see people all the time don't want to try anything different, even when they are consistently losing. I see it a lot of times, in the fitness world. My one friend is a trainer. He tells me this all the time. People are overweight or unhealthy, and they say, hey, I want to lose weight. Okay, stop eating this food. They still go home and they still eat that food. So the thing is, I'm here to tell you, we are in a time where social media is leading towards so many different pumps. Social media leads to so many different big rips and runs. Social media leads to so many climbs that these plays just get overextended. These plays are built up and fabricated on nothing but thin air. That's what is so great about us being in the small percentage. Because you know what? I'm trying to break you out of that old habit of you again just being locked up and saying, I just want to buy whatever stock moves on up. Because I guarantee there are people at this time. I can guarantee that there are people at this moment that are saying to themselves, yep, Deck, every time I see a stock spike, I always buy it at the very tippity top. Every time I see a stock move itself on up, I always say, I want to be the guy that buys at the very tippity top here. And then guess what happens? You end up losing. Traders, instead of buying at tippity top, why are we not the person that just shorts it at tippity top? One of my favorite emails that I get is, Deck, no matter what I do, I seem like I always buy at the top. And I say, awesome. Sounds like you'd be a great shorter. How about instead of clicking that buy button, you just click the sell button? Instead of clicking that buy button, you just click the short button. And you know what? Seems like you always have a perfect entry. So how do these companies spike? How do these companies move? How do these companies rip and run? Like, what is going on here? Let's really think about the foundation. Let's think about the fundamentals. Let's think about why these plays are moving the way they are. So what happens, guys, is these plays, such as ACIU or a lot of these other plays, come out with some sort of press release, okay? So if we take a look at our news scanner here, let's think about, why did this stock go on a big rip today? Why did ACIU go on a run? Like, what was going on with this play? And we could see ACIU did come out with all this press release here. And what we had over on this press release is right here. We had ACIU signs an exclusive option and licensing agreement for active immunotherapy targeting beta for Alzheimer's diseases. So I know that sounds confusing. And don't worry, I'm going to teach you how to find these hot press releases and how to know which ones are good or bad. So that's all going to come in time. But really what happened here is that every morning traders are watching news scanners such as this one, and they wait for hot keywords such as the word agreement, which is highlighted right here. And the moment that these keywords come on out, guess what everyone does? Everyone buys the stock, rips and runs, spikes and climbs, buys it, buys it, buys it, buys it. And it basically goes up too high too quickly. In anything, in all these plays, if they go up too fast, if they go up too high and too quickly, guess what happens? They eventually get selling. And the selling now turns and momentum shifts dramatically. Nearly every single one of these plays that come out with any sort of news gets pumped up too high, and usually the number one top gainers turn into the number one top losers. So guess what happens here? ACIU came out with a press release. People saw the press release, started buying it. Then guess what happens? People on Twitter, people on StockTwits, people on Discord, people say, everyone buy ACIU, ACIU is going crazy, ACIU, ACIU. And then guess what happens? It goes up even higher and higher and higher and higher until it starts getting the selling. Momentum starts moving on in. We start seeing shorts come on over. Momentum starts moving on in. Sellers get scared and start to panic. People start saying on their Discords and their chat rooms and their communities, they start saying, hey, everyone get out, take your profits, take your profits. That's where we make our money. Instead of being the guy that is constantly trying to find the big time spike and chasing and being the person that's waiting for every single person to say buy, 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 why don't we just wait for some key indicators to know that this is going to reverse and just be all set, ready to go? Because I already told you, ACIU, if you had a $2,000 account, you could have turned $2,000 all the way up to $4,000. You would have been able to make a double your account. The same exact thing with ACIU here. You would have to short $4,000 back on down towards where it's at right now, $3. That's a $1,000 profit. You make the same amount of money towards the upside as you do to the downside. You do. So again, a dollar up is $1,000 if you have 1,000 shares. A dollar down is $1,000 if you have 1,000 shares. Now, please remember, guys, if you are getting overwhelmed at this time and you're saying, Deck, okay, I'm a little confused, but don't worry. I would rather have you a little overwhelmed than underwhelmed. It means, again, you're working. Your brain is trying to figure this stuff on out. So this is really the idea that I'm looking at. This is the focus that I want you guys to be on top of. This is the understanding that every single day we will see hot press releases. These hot press releases will lead to very big spikes. Once these very big spikes get over pumped on up, they come dumping on down. You guys want to see something else that's going to back up this theory? It doesn't matter what stock I pick in the penny stock world. Nearly 9 out of 10 of them, I mean, I'm going to say 99% of them fall over time. The US Bureau of Labor and Statistics put on out that 85% of companies will fail within their first 2 years. So guess what that means? That means I'm not talking about Tesla. I'm not talking about Apple. I'm not talking about Nvidia. I'm talking about stocks that are like $10 and below. These are going to fail over the next 2 years, most likely. So the thing is, if I click ACIU and let's say I go back to like a monthly chart, notice ACIU is at $19. Now it's at $3. Let's take a look over on, GameStop right here. GameStop, I know again, GameStop had the crazy spike, so this one might be a little different, but even take a look at GameStop, how it's been fading and falling and dropping over the last 2 years. Let's take a look at TVGN. TVGN was at $21. It's now at $1. Let's take a look at CCLD. CCLD was at $5. It's now at $1. KOSS did have a monster spike. It's all the way down towards $4. Take a look at CZU. CZU was all the way up at, 20,000. This is from reverse stock splits, but now it's at $7. We could see INKT was at $20. Now it's at $1. We could take a look at CCG up at $200. Now it's at $2. What I'm trying to say here is that if I can show you that every single play I just clicked has been at a higher area, then was all the way down towards a lower area that it's at right now, and every single play that I clicked here this morning has gone on a morning spike and has now dumped on off, such as ACIU or TVGN or again CCLD, every single top gainer had a morning spike and gave all of its gains on back. And every single top gainer, if you look at the past chart history pattern, has all been falling for the last few years, and every single top gainer is looking more red. Why in the world do we wake up every single day and we say, hey everyone, what stock am I buying today? What stock am I supposed to look for the breakout? Hey Deck, what stock's gonna get the best spike? What stocks? Let's get that out of our heads. You are again shifting on over from being the naive trader that is again just on Twitter or StockTwits or Facebook or Instagram or TikTok. You are shifting out of that naive trader who has no idea what's going on and just following what everyone else is doing and trying to buy the play that's already bought up way too high. And you are now turning into the trader that's now saying, I'm outsmarting the market. I am going to be the trader that is now again outsmarting other traders. I'm going to be the person that's not the sheep buying at the very top, just paying other people money. I am going to be the person that is waiting for that reversal and now betting that it's going to fall, just as every single play fell. People say again, 80% of stock traders lose, 90% of stock traders lose. Do you know why? Because 80 and 90% don't understand the market. 80 to 9% just basically say, hey, every single day I'm just going to wake up and basically follow this guy on Twitter who has a lot of followers and he's just going to tell me what the best play is. Sure, you can again buy Tesla and say, I hope it goes up. Sure, Tesla's a great company, right? Hey, Deck, I want to buy Nvidia and hope it goes up. Sure, I understand that. Hey, Deck, I want to buy this. I hope it goes up. Sure, I understand that. But the thing is, team, I want you guys to understand more. I want you guys to say, hey, these small cap plays are not going to go on. These small cap plays have a better chance of going down over time. Just like blue chips, it's better to bet on calls for options most days because they go up. Just like on penny stocks, these are all built up by hype and social media. And the moment traders get scared, they dump off the shares, just like CCLD. So when I show you these big profits and I show you these big plays and I show you, wow, I can't believe again, this guy was able to make so much money. This was all from what? This whole entire thing right here. This all $570,000 was all from shorting. Shorting. Yes. Are there losses? Of course there's losses, guys. There are going to be times that stocks move up higher than you expect and they go up a little bit more. So are there losses? Sure, this is not bulletproof. But what I will tell you is we have the odds in our favor. Let's talk about why I was not a fan with options, guys. And I've talked about this with our traders before. With shorting, what do we need to do? We basically just have to figure out what stock is going to be the hottest, and we need to figure out a great entry on when we think that that stock is going to fall. So what we have here for shorting is we're going to have to figure out what stock is going to go on the big rip and run. Maybe it's going to be stock ABC. And now this stock, it's moving up. All we have to do is figure out when's the best entry before this thing starts come crashing all the way back on down. That's it. That's all we got to do. Figure out when the stock is going to fall. When a penny stock, which is already overbought, which has been known to fall, which is probably going to be cracking, which has been falling for the last 2 years, when is it going to start dropping its way back on down? That's all we got to do. Now, let's think about, options and why I really did not like options whatsoever. When I was trading options, I felt like I was the tourist. I felt like I was basically the person in the casino getting taken advantage of. I was, guys. I was getting taken advantage of left and right, with options. And the reason why I say that is because I need to figure out what is going to be the best stock, right? So what's the best stock? Then I have to figure out, okay, what is the best entry? But the thing is, now I also not only have to figure out the best play and I have to figure out the best entry, but I also have to figure out the strike price. How high or how low will that stock go up to? And not only how high or how low will that stock go up to, but I also have to do it within a certain period of time. So I have to pick the right play, I have to have the right entry, I have to figure out how high or how low it's going to go up to, and I have to do it within the correct time frame. Now also, if it does it within the correct time frame, but does it slower than what I want it to, well then I'm also going to have time decay. That's going to be a major factor. And also there is going to be other Greeks that could limit me from making money. Now also on top of that, if a lot of people are doing the same play that I'm doing, I'm also going to have implied volatility. So let me get this right. So for shorting, we already know that 99% of these companies are most likely going to fail over these next 2 years. futures. We know that nearly all of them are going to have morning spikes from hot news, and the moment that everyone dumps off their play, it leads to a very big dump. Awesome. And on top of that, I can hold it as long as I want without any sort of repercussions. As long as I just keep holding, there's a great chance that they're going to be going down. Correct. On options, I got to pick the right play. I got to pick the right price. I have to figure out how high or how low it's going to go within a certain time frame. And if it doesn't do it as fast as I want, I lose money from time decay. Then I have other Greeks to worry about. And if everyone does the same play that I do, I don't even make any money regardless. Whoa. Why the heck am I doing options? Why the heck am I getting involved in this in any sort of way? What the heck are we thinking over here doing options, guys? That's what's so nuts about it. That's what's so crazy about it. If anything, again, I'll give it to the futures guys at least. For anyone here that's doing futures, hey, I'll give it to you guys at least. For futures, you guys at least don't have any sort of time decay or anything like that. But really, when we're thinking about, all right, how can we make the most amount of money in the stock market? The most amount of money, you want to know how to be able to make the most amount of money? This is the secret right here. We want to find stocks that have high moving percentages. If we can find stocks that are going to increase in a very quick manner with high percentages, that's how we're going to have a great return on investment, right? So we want to be looking for high increases for the best ROI, return on investment. So that's why we look over on penny stock. I could see GameStop is up 52% on the day. I could see ACIU is up 45% on the day. TVGN 45% on the day. CCLD is up 22% on the day. So imagine being able to have a 45% return on a day. Imagine again, just nailing a piece of it and getting a 12% return on the day. Now that's beautiful and that's great. Let's think about something right here. Let's go with what most long-term investors look at. They say the average stock market return is 10% per year. 10% per year. Now traders, this is the safest way to trade. It really is. If you put $1,000 into the S&P 500, you can be able to walk away in 12 months from now with $100 in profit. Now, that doesn't really sound too great, does it? You're saying over 12 months I can make $100? It's coming out to like 20 cents a day, right? It's barely anything. But obviously, when you have a lot of money, it makes a lot more sense. If I have $100,000 and at the end of the year I have a free $10,000, that's pretty awesome. If I have $1 million and at the end of the year I have a free $100,000, that's pretty awesome. If I have $10 million at the end of the year, I have an extra $1 million, that's pretty awesome. So the thing is that you guys need to understand is having those 10% returns is great when you have a large amount of money. But the thing is, not everyone here has $10 million in their account to make a free $1 million a year. So a lot of us definitely focus on a little bit riskier, but we want to trade the riskier plays as safe as we can. And that's why we look at a lot of times these GameStop type of moves, ACIU type of moves, TVGN type of moves, CCLD type of moves, where we can be able to get a better return on investment without having to wait so long. Now, as we know, this is where the emotions start kicking in. This is where the FOMO starts kicking on it. This is where traders start saying, Deck, GameStop's moving on up. Can I buy GameStop? Guys, GameStop's starting. Deck, did you buy GameStop yet? Are you in on Deck? Should I buy GameStop yet? Traders, the thing is, I am not a person that you are going to find that I am going to be buying a lot of these breakouts, buying a lot of these plays, buying a lot of these stocks here. I like to look for the reversals of these plays because remember what I told you. I already told you. Just switch over to a weekly chart. Go back to a monthly chart. Every single one of them is going to come crashing on down. Take a look. ACIU, every time it spiked, it gave all its gains back and then came crashing on down. Every time it ripped and ran, it spiked on up and came crashing on down. Even take a look at GameStop here, guys. We already know the story here. GameStop, take a look. Every time it spiked, it gave it all back. Every time it spiked, it gave it all back. Every time it spiked, it gave it all back. Every time it spiked, it gave it all back. So the thing is, you don't want to be the guy that is buying at the very tippity top and saying to yourself, oh man, I hope it goes higher. I hope it goes higher, when we know there's a better chance that it's going to fall on down. Remember, we want to put the odds in our favor in every single way possible. So we know the most amount of money is going to be made if we have a higher percentage return on investment in a quicker amount of time. Now, the thing that we already talked about is the higher percentage return plays. Okay, the higher percentage return plays are not going to be in blue chips. The higher percentage return plays are going to be in smaller plays, right? We know that the smaller the play, the better percentage return. So that is why I like to look at penny stock plays. Now, penny stocks are a term. That does not mean that I'm actually looking for a stock that's 1 penny. I would not play a stock that's 1 penny. I personally look for anything between 50 cents all the way on up towards about $25. So when I am talking about penny stocks, I am talking about anything between 50 cents to $25 because these are going to be plays that are going to get very nice returns for us. These are also plays that we can also afford. These are plays that we could be able to get involved in, and they are going to still be able to be manipulated from against social media. If you like it or not, plays are going to be manipulated by social media. You guys want to see an example of this? Let me know. Right now, I'll show you a perfect example on why social media is a huge manipulator to the market. Today, it is currently at this time, Monday, May 13th. This play right here has GameStop spiking all the way on up. Does anyone have any idea why GameStop is spiking on up? Guys, GameStop, this was a play that spiked all the way back in 2021. This was the play that was everyone's favorite play back in 2021. Why in the world is GameStop spiking right now? I'll show you. Do you know who started the GameStop hype? Roaring Kitty. Roaring Kitty is an investor who is just a normal guy who was the first one to tell people to start buying GameStop. He's basically the guy that everyone talks about. He was the one that they made the movie after. Roaring Kitty, just a normal guy who, again, it started a whole entire Reddit group saying, everyone buy GameStop, it's gonna have a short squeeze. And he was the first one to lead towards that ginormous rip and run. So if you guys go over to Roaring Kitty's Twitter, guess what? Take a look at Roaring Kitty's Twitter. Last time he tweeted was back in June 18th of 2021. But last night he tweeted for the first time 13 hours ago. 11 million views this tweet got. 11 million views this one tweet got. How insane is that to think about? 63,000 likes. Let's go over to the comments section right here. You can see, welcome back, Diamond Hands, right? Tell us what we're buying. Time to mess up Wall Street again, right? You can see this guy rock hard, okay? You can see how everyone is excited to see what he is going to be getting himself in next. Everyone's putting green candles on up. Everyone's posting old videos of Roaring Kitty. Everyone's saying game on. Everyone again saying shorters are in trouble now. So the thing is, guess what's happening here? If Roaring Kitty was the guy that started the GameStop hype and now he's basically saying, hey, I'm back. He's moving back forward, basically showing he's interested in a play. This whole entire spike today is absolutely fabricated. This whole entire rip and run today over on GameStop is all spiking because this one tweet got 11 million views today. How insane is that? 11 million views because a guy posted a picture of him moving forward, showing that he's now interested in possible GameStop, possible a new play, but every trader is saying, uh-oh, GameStop time. And you're telling me that, oh, well, why is this stock moving on up? Oh, this stock's moving on up right now because it's a good, healthy company. No, GameStop's not a good, healthy company right here. People are buying it because the guy who started the entire squeeze just posted for the first time in 2.5 years. That's why GameStop's going on this huge rip and run. Let's just imagine here. Let's imagine if all of a sudden he tweeted and says, hey, my next new play is this one. I'm done with GameStop. GameStop would come crashing all the way down to the ground and everyone would move over to the next play. So what you have to realize is Roaring Kitty's a little bit of an exception. If Roaring Kitty tweets something, there's millions of people that are going to buy it. Millions of people that are going to buy it. But if again, a normal, let's say guy who just has 90,000 followers, 50,000 followers, whatever, has a Discord, has a chat room, if he again posts everyone go buy a play, it's very quick up and very quick on down. But don't miss this golden era we have right now in front of us of basically pure manipulation off of, again, social media. Now, some people were asking and saying to me, hey, Deck, is shorting these plays, is this illegal in any sort of way? Is this anything bad? I mean, it seems like a lot of people pump up plays right here. What we're doing is 100% legal. If I said, hey, everyone go buy this play right now for no reason whatsoever, and I was already in on that play, that would be me pumping it to you, basically me trying to get profits from you guys. That's what's illegal. If we see other people pumping up plays, and we know that these are plays that are just going to come crashing back on down, and these are plays that are going to just be based off fluff, and we are using an investment edge and saying to ourselves, wait a minute, I know that this guy on social media, this guy on Twitter, this guy on Facebook, this guy on Instagram, this guy on TikTok, he's just pumping up plays trying to make money off of his followers. Instead of joining his followers and making that guy a lot of money, do you know what we do? We say, hey, the moment that guy sells and tells his whole entire sheet to sell, guess what? The whole entire stock's gonna come crashing all the way back on down. So instead, we use that investment edge. We say, hey, we are going to get ready for that crash, for that when that guy inevitably sells and takes profit, we're going to make money the entire way back on down. So are we doing anything illegal? Are we doing anything bad whatsoever? No, not at all. Not even close. All we're doing is saying, hey, I think this play is up on fluff. Hey, I think this play is up on nothing. Hey, all these penny stocks, 99% of them come crashing back on down. Hey, this play is up just because a whole bunch of people are buying it off social media. Hey, this play is up because this guy on Discord said everyone go buy it. There is no reason whatsoever on why these plays are up. So that's why they come all the way crashing all the way back on down. So this is the beauty of stock trade. Understanding, finding this social media, understanding how hype works, understanding the action, the activity, and really right here, right now, this is, this shorting group here. What I plan on doing here with you guys every single day is I want to be able to take down everything that is fluff, everything that is manipulated, everything that is up for no reason whatsoever, and basically say, hey guys, we are going to be getting ready to see these things dump on off. We are going to be getting ready to see all these plays crack. We are going to be ready to see all these plays fall apart. We're going to be ready to see all these plays come crashing on down, and we make money as these plays start fading and falling. So I hope you guys are excited. I hope you guys are ready to rock and roll. I hope you guys are with me right now, and I hope you guys are are just absolutely jacked on up at this moment. We are going to find reversals from two different areas. Number one is going to be previous chart resistance, and number two is going to be upper shadows. I'm going to teach you guys one of the best cheat sheets there are in the stock market. One of the best ways to know. You guys ready for this? And we're going to dive into an entire deep dive lesson on this. But right here, right now, I'm going to teach you one of the best ways to know when to get out of your buy and when to start getting involved in shorts. How to know that a stock is about to fall. How to know that we're about to make a lot of money on shorts. And it's by looking at those upper shadows. When I take a look over on GameStop right here and I ask, where is this stock going to reverse at? You can see every single time we had an upper shadow. If that is in pre-market right here, an upper shadow is the upper band of the candle. It almost just looks like a black line coming out of that candle. This upper shadow leads to this drop. This upper shadow has led to this sell-off. This upper shadow led to this sell-off. Deck, can you show any other example? Sure, let's just go GME is the number one top gainer. Let's go to ACIU as the number two top gainer. ACIU, Deck, how do I know when to short this play? You guys want to know? ACIU, when you see a very big spike and you see the upper shadow. The upper shadow means exhaustion. When a stock gets exhausted, that is where the stock is now going to say, hey, it's time to start reversing. Hey, it's time to start moving in the opposite direction. Hey, it's time to start dropping on down. So if I take a look at ACIU, spike, 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 clear cut upper shadow, reversal on down. It's almost like I always say, when you climb a mountain, you put the flag at the very top of the mountain. I have reached the summit. You go back down the mountain now. So the ACIU, very nice spike, hit the upper shadow. That's the tippity top. Take a look at GameStop right here. Guess what happens? GameStop, we have spiked our way on up. We hit the top of the mountain. Buyers are now exhausted. They take their profits. Here's the reversal on down. You will realize that nearly every single time you have an upper shadow, it is going to lead towards selling. Not only on, let's say, the minute chart, but let's just go over to ACIU right here on the daily chart. And let's see what we have on the daily chart here, team. Right? Take a look over on this. Here's a very big upper shadow. You can see reversal. Here's a big upper shadow. You can see reversal. You can do this a ton with these plays. Here's a very big upper shadow. They're easy to find. They stick out like sore thumbs. When you see a big upper shadow, take a look. There's a reversal, right? Let's take a look at GameStop, guys. Let's just do this with GameStop. When we see a big upper shadow on the daily chart, let's bet that we're going to see a reversal the next few days, okay? So let's see here, right? Look at this. Here is upper shadow, big reversal, upper shadow, big reversal, upper shadow, big reversal. It really comes on down to the larger the time frame, the better chance you have of seeing that reversal. So for instance, you want to see it super clear? Look at the weekly chart. Here's a monster upper shadow. The following week was all red. Here's a monster upper shadow. The following week is all red. Here's a monster upper shadow. The following few weeks are all red. Upper shadow, sell off. Upper shadow, sell offs. Upper shadow, sell offs. It's so simple. It's so easy. You see upper shadows, you can understand that we are going to be seeing reversals in the future. So we're going to dive into lessons on that. Don't worry. We're going to teach you guys how to be able to find it, how to be able to see it, when to enter, how to enter, all that stuff. So this next segment that I want to be talking about, going into, of course, our day one and our introduction at this time, is going to be something that every person is going to have to face with, okay? And it's not going to be fun. It's going to be a little annoying. And what is that, guys? That is going to be the PDT rule. The PDT rule is going to be something that every person that has less than $25,000 is going to be facing. So what is the PDT rule? The PDT rule is a pattern day trader, is a regulatory designation for those traders or investors who execute 4 or more day trades over the span of 5 business days using a margin account. The number of days trades must constitute more than 6% of the margin account's total trade activity during the 5 business day window. So if you are a brand new trader, I have some bad news for you, unfortunately, but I'm going to tell you it because I have to. You cannot just trade nonstop as much as you want. If you are a trader that is looking to short, you have to be using a margin account. Now, what is a margin account? A margin account is going to give you double, triple, even quadruple of how much money you have in your current account. So here's the beauty of this, guys, okay? If you want to short, you have to use a margin account, okay? So let's talk about this and let's go over the PDT rule. We have our margin here. Margin is going to give us double, triple, quadruple our buying power. So when you guys set up your account on Lightspeed, if you set your account up on any other broker that you may have, guess what? You invest $2,000 in on this play. You guys are now going to have 4 times your buying power over on Lightspeed. So this is the beautiful thing that you guys are going to be very excited about. You now have $8,000 that you can trade. That sounds exciting because I know before you guys are saying to yourself, oh man, this is kind of nuts. This is kind of crazy. I only have $2,000. Well, when you're on a margin account, you have $8,000 that you can trade. Now, this is where it's a very strong pro and a very strong con. If you are not an experienced trader, you are going to most likely abuse this $8,000 and that can lead towards very big losses. So let's think about it. If you have a $2,000 account at this time and you're saying, all right, Deck, I only have $2,000, but now I have $8,000 with my margin and buying power. This is so great because now I can trade stocks like ACIU. I could get 2,000 shares. Let's just think about this, guys. Let's think about this in the best case scenario. ACIU right here. This stock came up to $4, okay? $4. If you have a $2,000 account, you now have $8,000 in your account. Boom, $8,000 right here. You can now get 2,000 shares at the price of $4, okay? So now we have 2K shares. Now, every time that this stock falls $1, you make $2,000. So if this stock goes from $4, falls on down to $2.92, that would be a $1 and about 10-cent profit. 2,000 shares, that is going to be a $2,200 profit. So imagine this, guys. If you had a $2,000 account today, if you shorted ACIU at the price of $4 with your margin, you would have been able to double your account just today alone to $2,200. Think about how incredible and how awesome that is. But here's the downside. Let's change this over into a bad scenario. Let's change this over into the fact that you are saying to yourself, hey, Deck, what if I shorted at the price of $4 and let's say hypothetically this stock ran all the way up towards $5? Well, if you shorted 2,000 shares at the price of $4, that's going to take you all $8,000 in your margin account right here, right? And with $8,000, you have a lot of money to make or possibly lose. Now, if the stock moves up to the price of $5, well, just like if it falls, you make $2,000. And just if you lose $2,000. Well, guess what happens? Once your funds settle on out, you lost $2,000 right here. You only had $2,000 in your account. Your account is now gone. So margin sounds incredible because guess what? If you are right, you could double your account on the day. You could triple it. You could quadruple it. You could be able to make so much money. But if you're wrong, you can lose so much money even quicker. So team, right now I'll show you on my account. On my account, I have over $25,000 in my account. So I'm going to take a screenshot of this. I'll bring this on over so you guys can see absolutely everything. And let me grab this. So look at this. So right now in my account, I have $25,703 over on my Lightspeed account. But I can trade upwards of $102,000 in my account. How cool is that? So basically, if I wanted to get involved over on these plays, I want to get involved in GameStop here, okay? Let's think about GameStop because this would be a realistic play that I would like to get involved in. GameStop, I would want to say, let me get 2,000 shares on GameStop. That's what I would like to do. Here's 2,000 shares. I want to bet against GameStop. That is going to cost me, if it is currently at $31, that is going to cost me $62,000 in buying power. Now, can I get that? Absolutely. I have $102,000 in buying power. But that is going to now show that every single time GameStop drops $1, every time again GameStop falls $1, I'm now going to make $2,000 in profit. Okay? So if I shorted at the price of $31.45, right now it's at $30.71. I would be up about $1,400 right now. How great is that? Right? So as it falls and fades, and the bigger the play here, guess what? This stock was all the way up towards what? $38? It went from 38 all the way on down to 31 right now. That's a $7 drop. That's how, again, I can make $14,000 in today. $14,000 profit today if I went from this point to where it's at right now. That's a $14,000 profit. Now, at the same time, though, you need to understand, if this play goes opposite and I lose $14,000, well, then guess what? I wake up tomorrow, $25,000 in my account, minus, again, $14,000. Well, guess what I'm waking up with tomorrow, guys? I'm only waking up with about $11,000 in my account. I just lost a good portion of my account. At the same time, if I won $14,000, I'm waking up tomorrow and I'm going to have $39,000 in my account. So you can see how margin, guys, can make you a ton of money. But at the same time, margin can also lose you a ton of money. So this is where you do have to be experienced. This is where you do have to say to yourself, all right, let me be a smart trader. I am going to read this out loud. I'm going to tell you this right now, but nearly no one's going to follow it. Maybe a few people are going to follow it. And I'm telling you right now at this moment, if you follow this, you will have such an incredible chance of being successful. It's almost guaranteed, but still 99% of people will not follow what I'm about to say. You guys ready for it? All right, here we go. Most traders lose from one thing, and that's lack of experience. You probably have heard me say a million times in chat already, if you just started day trading, this is a completely different world than regular stock investing, especially when it comes to shorting. This is a fast-paced, in and out action based on momentum. The absolute number one reason why new traders fail is they trade before they are ready. If you have never picked up a football, don't expect to play in the NFL. If you never touched a basketball, don't expect to be in the NBA. It takes time to be great at something. When I first started stock trading, I was off, but after a few months of paper trading, it started to click. The reason I am a successful stock trader today is because I paper traded first. If I used real money right away, I would have lost everything. You need to allow yourself to learn before jumping in and trading against some of the best other traders in the world. So I am again throwing out there, please paper trade first, guys. Everything I teach you, please understand that you are going to have trials. Please understand that you are going to make rookie mistakes. Please please understand that you are just not going to wake up tomorrow and be great at this. You will want to build experience. And the last thing I ever want you guys to do is build experience by losses of real money. Lose fake money. And then once you start winning fake money, then go to real money. So let's think about the right way to do this. So after you paper trade and study, it is then time to build up your emotional tolerance. The best thing to do when you first start trading is week 1, trade with no more than 50 shares. I understand this means you will not make much, but you cannot lose much either. Week 1 is more about learning to deal with emotions of trading rather than actually making big profits. Week 2, bump it up to 100 shares per trade. Week 3, 200 shares, etc. Each week, your mind and emotions will learn to cope with real trading and real money. You cannot jump to 2,000 shares per day and expect to be okay. Follow the process. So traders, please read this, screenshot this, write this down, print this, whatever you need to do. This is so crucial and this is so important. Every single month, every single year, I see new traders jump on. They say, hey, Deck, I finally saved up enough money. I finally have $2,000. I finally have $3,000. And guess what? They start trading right away and they lose. It would be like basically, again, me telling you, hey, you never picked up a football before? Here, go play for the Patriots. Go play for the Jets. Go play for the Chiefs. And you say, okay, well, you'll tell me the right play, right? Yeah, I'll tell you the right play, but you never thrown a football before, right? Yeah, no, but you'll tell me the right play, so I'll be okay, right? I say, right? If I say, hey, go ahead, you're on the Chiefs right now. Run a fake 23 blast, backside George reverse. Make sure you got a hot route coming in. Watch the man on the middle. Might shoot the A gap. Guess what happens? You might say, well, I don't really know what's going on here. Hike, hike, hike. All of a sudden, 300-pound men are laying on top of you. Your ankles are behind your head, and you're out for the next 2 years because, again, you broke your meniscus, right? The thing is, you can't come wobbling over to me and say your play didn't work. That's not true. The play was perfect. Did you know how to do the play? Do you have experience? Do you know how to read a defense? Do you know how to do all these things? No, I don't know how to do that. So why do we expect to be able to throw a touchdown here? If you have never lifted before, you've never lifted a weight before in your life, can you just say, oh yeah, put 3 big plates on each side and start repping out 315 pounds? No, you start with the bar and then you move your way on up. So I know it's not something anyone likes to hear, but guys, I ask, please paper trade first. And then after you are successful, let's go over and build up your emotional tolerance. Paper trading's for experience, not your emotion. The big thing is I finally get people to paper trade and then they say, okay, I'm ready to start trading real money. Then they go over to big shares of real money. Say, Deck, I don't get it. Every time again I paper traded, I go to real money, I get so scared. And now I don't want to do the same thing. Well, we paper trade, now we take baby steps in a real money. Just like, again, our muscles, we have to build up our emotional tolerance muscle, which is going to be, we don't just do 10,000 shares and have $20,000 on the line. We do 50 shares. We have $300 on the line. I know what your heart's going to pump over that. And then once 50 shares turn into nothing to you, go up to 100 shares. Then your heart starts pumping again. And then once that becomes dull, you go to 300 shares. Then you go to 500. Then you go to 1,000. Then you go to 2,000. So your heart's not going crazy and you're not making dumb mistakes. Guys, guess what? I'm not saying this to brag in any sort of way. But if I do, again, 1,000 shares on a stock that's, $2, my heart doesn't pump at all because I'm so used to it, right? If I do $300,000 investment and I'm seeing my P&L up and down $20,000, sure, my heart's going crazy. When your heart's going crazy, it means you're outside your tolerance. You're outside where you should be. You should be able to trade cool, calm, and collected. That is where your money spot is. If you feel like you're freaking out, you're saying, I don't, that's where, again, you're in too high. You're in too high. Limit those shares. So follow this, guys. Learn over these next 30 days. Paper trade, then become successful, then start small, then grow, then become bigger. If I can't grow a fake account, why in the world could I grow a real account? That's what you guys need to be able to figure on out here. So let's get back to this PDT rule. The PDT rule, if you have less than $25,000 in your account, that's less than $25,000 even with margin, you will only be able to trade 3 times for that week. Yes, guys, 3 times. Now, the reason why they have the PDT rule is because the SEC is basically looking after you. That's what they're trying to do. They are trying to look after your account where they are saying, hey, we do not want this person, we do not want this lady, we do not want this trader to blow up their account by just trading too fast, too quickly, especially on margin. So guess what they do? They limit your trades. They say that you can trade 3 times over a 5-day period. Now, what is that going to lead to? Even though it sounds very annoying that you want to trade a lot more than that, it does help discipline. It does help you from over trading. And a lot of traders overtrade. A lot of traders can't help themselves. A lot of traders say, I want to keep on trading and trading and trading and trading. So the thing is, the PDT rule, even though you're going to get frustrated at times, even though you're going to say, Deck, I wish I could trade right now, I'm annoyed by this, it will be helpful. So what I want every single person to do at this moment is to realize if you have a day or if you have an afternoon that you can't trade, paper trade. Every broker, including Lightspeed, is going to have paper trading available for you. So when you open up a broker, you will be able to have paper trading available. So what I want you guys to do is when you guys are trading, trade, wait for that number 1 trade. For instance, GameStop today. today. Guys, what did I already tell you? Didn't I already tell you again an hour ago that this was going to be the top? Didn't I tell you that after we see the upper shadow that GameStop was going to fall from here? So what could we do? We could say, hey guys, let's get involved in GameStop and let's short this play. And we short it, and the stock goes from $38 and fall to $30. And you say, boom, Deck, I just made my money, I'm all set. But unfortunately, I don't have any more trades until Wednesday. I don't have any more trades until tomorrow, whatever it may be. Then go ahead and just log over to your paper trading side. And then once you log into your paper trading side, you'll be all set to just still keep practicing, still be all set, ready to go, still be all ready to rock and roll here. That's, again, a great way. There are two ways that you can get around PDT, okay? Now, if someone asks, you didn't hear it from me, okay? So these are the two ways that you guys can get around the PDT rule, which is going to be a little frustrating at times, but it is there to help you. If you have a little bit of a larger account here, let's say you have $10,000, okay? You have $10,000. Remember, you need to have above $25,000 to trade every day nonstop. Once you get above $25,000, you can trade as much as you want. You can trade every day. You can trade 100 times a day, every single morning, every single night, whatever you want. So, Deck, what if I don't want to just have 3 trades per week? I want to have more than 3 trades. What is a way that you can do this? Well, a way that I would suggest is by opening up 2 different accounts. So you can open up 2 different accounts on Lightspeed. You can open up 2 different accounts on different brokers, whatever you want, okay? So what I would do is I would split this right here into $5,000, right? So I'd put $5,000 over in this account, and then I would put $5,000 over in this account. Now, this account right here is going to be on Lightspeed. This account over here is, let's just say, whatever other broker. Let's just say Webull, okay? Now you have 5,000 here, 5,000 here. Now, what you're going to do is you are going to put both of these accounts over on margin accounts, okay? So you put both of these accounts over on margin. And now, guess what? You wake up the next morning and both of these accounts now have, since you're on margin, it has 4-to-1 buying power, is now you have $20,000 in each. So you have $20,000 over here, and now you have $20,000 over here. So your options are, you could keep your whole entire $10,000 if you wanted to. You can keep $10,000 all in one account right here, and then you could get $40,000, right, in margin. Or you can split it and do 5,000, 5,000, have 20,000, 20,000, and then you're all set, ready to go. If you do this method, you can trade this account on Monday, Wednesday, and Friday. Then you can trade this account over on Tuesday, Thursday, and then the next following week, when you trade on Friday, you trade this account on Monday, Wednesday, Friday, and then this account would switch over to Tuesday, Thursday, and then so on and so forth, and you could switch back and forth. So every single day, you can make one short if you wanted to. So that is a way to get around the PDT rule if you guys would like to, okay? And that would be, again, splitting your money in half, opening up 2 different accounts, and now you guys can trade every single day without having to sit out. Or you can keep all your money in one account and just have more buying power over on that one account if you would like to. Now, what is the other way that you guys can get around the PDT rule? The other way to get around the PDT rule is to get a broker outside of the United States. This is not what I suggest. I do not suggest this in any sort of way, but you can do this. This is the United States right here. So that's the USA. All right, USA. The USA, no matter where your broker is. If your broker is Lightspeed, if your broker is E-Trade, if your broker is TD Ameritrade, if your broker is Webull, if your broker is Charles Schwab, if your broker is Centerpoint, if your broker is Trade Zero, whatever it may be, as long as your broker, right, is inside the United States, brokers in the United States, you are going to be underneath the PDT rule if you are on a margin account and if you have less than $25,000 in your account. If you are underneath 25K, or if you guys are on a margin account, you will be underneath the PDT rule. The only way to get out of that is to be getting a broker that is outside the United States, such as in the Caribbean, or, let's say somewhere in a different island, or somewhere, in Europe, wherever it may be. So that is the only way for you guys to be able to do that. Now, I do not suggest that. You know why? Because sending your money outside the United States regulations, it's not illegal, it's just probably not very responsible. And the reason why it's not responsible is because if E-Trade ever lost your money, guess what? You could contact E-Trade. E-Trade has laws. They need to refund you, whatever it may be. If you send your money to Jamaica and you say, hey, all my money disappeared when I was in Jamaica or some sort of weird island, right? What are you going to do? You're going to contact a lawyer and say, hey, we're going to go down and sue Jamaica, right? Those are different laws. Those are different things. Money goes poof. Money disappears. Money might not be there. So even though, again, the PDT rule is annoying, it is there to help. And if you're really not a fan of the PDT rule and you really want to trade a lot, split again your account into 2. And if you're saying to yourself, oh, Deck, I don't want to split my account in 2, I want to trade nonstop, then you got to get above 25,000, right? Those are the options. Well, Deck, do I have to use a margin account? Yes, you have to if you want to become a shorter. You cannot do any shorts on a non-margin account. Only on, again, cash accounts would that work. All right. Today was a very nice intro. I think we've gone over a lot. We're setting ourselves up with great brokers. We have our margin account. We're learning about margin. We're learning about shorting. We're learning about upper shadows. We're learning about this and that. Remember, you are not going to get absolutely everything overnight today. You're You're not going to get everything in one day. This is a 29-day class, okay? I'm showing up every single day. All I ask is that you guys give me the same respect that I give you guys. I'm trying to give you my 100%. I hope you guys give me your 100%. My goal is by the end of this 29 days, every single trader leaves here and says, wow, I'm profitable. Wow, I can do this. Wow, I know exactly how Deck's doing it.